welcome to Cigars and Syndication. I'm Robbie. I'm here with my co-host and partner Jay, where we're passionate about cigars and passionate about real estate and investing in real estate. Uh, Today we're smoking a Fuentes Rare Pink. How are you liking that so far, Jay?
Hey everyone, I'm Junaid Noor. Welcome to Cigars and Syndications. Fuente is a good smooth smoke. I like this smoke. I don't know why it's called Rare Pink. Is it because of breast cancer awareness?
I think it could be. Honestly, I don't know the answer to that, but we can probably find out before the podcast is over.
It's a good smoke. So, anyway, what's our topic today, Robbie?
Today we're going to talk about investing in Texas real estate markets, the different markets in Texas. We're going to kind of zero in on Houston, Dallas, and Austin, and just talk about why these markets are doing well.
You know, those are some of the best cities in Texas, and Texas being one of the best states to still invest in real estate. And that, the triangle, what we call the triangle of Austin, San Antonio, and I'm sorry, Dallas, San Antonio, and Houston, right? And then Austin falls in between somewhere over there. These are still hot markets if you want to invest in real estate. And we're going to talk a little bit about what you're looking for, what you need to look for in order to invest in those markets, and why they're hot markets. So, what's our number one market right now?
In Texas, it's going to be Houston still, and I'm partial to Houston. I'm here, born and raised, and I think with the steady appreciation and the home values, from a national standpoint, have always been low and still remain low, which I think is pretty attractive. We have some of the larger corporations in the country here. I think we had 41 of the top 1,000. There's some really good reasons that Houston's still a strong economy.
Yeah, so we look at three separate factors, or three of the major factors. If you do like a back of the napkin evaluation, the first factor we look at is the job market. Is it a strong job market? Is it a weak job market? Are people moving in? Are corporations moving in? Because obviously, at the end of the day, if there are no jobs, people can't buy houses, and then eventually they'll start moving out. So the job market is the first thing that we look at. The second thing we look at is it affordable? So let's take a look at Silicon Valley, for example. Um, People were back in the 90s, people were moving into Silicon Valley. The jobs were really great, the money was really great, but the housing was not affordable. So, people who were not at the top executives um, at Silicon Valley firms had to live far away. I actually had a friend of mine who moved from Chicago to Silicon Valley because he got this great job. They gave him a 30% raise over his salary in Chicago, but the only thing he could afford was an apartment 2 hours each one-way drive. So a 4-hour commute to his office because that's all he can afford.
That's I think one of the advantages for Texas in its entirety is it does seem to be more affordable. I mean, there are, pockets that are crazy expensive, but for the most part, you've got affordable housing throughout the state.
Yes. And the third thing that we look at is the population growth. And that kind of ties in with the strong job market, right? If there's a lot of jobs, people come in from all different areas and they start moving into these cities. And the population growth is very important because if the population is decreasing, then what's going to happen is that uh, the value of the existing homes will start falling because there's a lot of homes that nobody wants.
And I think that, you know, Houston hit those markers, but Dallas was right on its heels and really strong market as well. They had a lot of things going for them as well. I mean, it's just a natural logistical place to be for a big corporation. I mean, from a distribution standpoint, and just been a really strong growth market for the last 4 or 5 years, and kind of seems like it's still growing really strongly.
So just to wrap up a little bit more information on Houston, 41 of the top Fortune 1,000 companies are in Houston, and Houston is number 4 for the most amount of Fortune 1000 companies after New York and Chicago and Dallas. Dallas is number three. So that kind of will tie into our discussion, Dallas. Now, the good thing about Houston is that the appreciation in property has been around 2 to 3%. So you don't get these swings like in Chicago, back when I moved here in 2002, uh, Chicago home prices jumped up dramatically and then they crashed. Phoenix had a similar issue. Houston, the upside is it goes up nice 3%. Uh, you don't get see these dramatic swings up. But then, of course, when it drops, it doesn't drop that much either because it never went up that much.
Yeah, and I think for a comparison for the Texas market, Austin is going to be our most volatile city. It's closely tied to tech, the IT industry, and they have huge influxes, but they have some pretty big slowdowns as well. And that real estate market is a tough market. It can definitely have some highs and lows.
So when we're talking about Dallas, Dallas is our second um, uh, the second market that we would like to be in, or we like the most in Texas after Houston, and of course we're biased with Houston because we live here, but Dallas also has the number two amount of Fortune 1000 companies after New York and Chicago. So there's a lot of it's a strong job market. In addition, population growth, right? So jobs attract the people, and the people keep coming in and they keep moving in. And so the population is growing rapidly with an estimated increase of about 1.5 million people over the next 10 years.
And just to chime in, Jay, you were correct. This rare pink from Arthur Fuentes is in fact tied to breast cancer awareness. Sorry, I didn't know that up front.
Yeah, I figured because it had the little pink wrapper on the foot of the cigar as well that we just removed. Um, so in comparison with Houston, Dallas's market is a little bit higher. Their average home price is about 424,000 versus Houston's 320,000. And Dallas has been ticking up a little bit higher at about 7.6% year over year. Now remember, back before 2008, before that crash happened, average home prices in the US ticked up 2 to 3%. And that was pretty normal across the board. 2008 happened and banks stopped lending, developers stopped developing, but the population did not stop growing. We still have, uh, millennials who are coming into the job market. We have people who are immigrating into the country, um, and they all need homes. So from 2008 to roughly 2018, a period of 10 years, there's very slow growth in the development of real estate, but the population kept going up, and now here we are with a shortage. So when you see a 7.6% increase in home values, um, you know that is not normal. The normal average is about 3, 2, 3, maybe 4%, and that's about it.
Yeah, Jay, that very well might be the new norm. I don't know if it's for a year or 2 years or 3 years. Who knows? With the interest rates as high as they are, there still seems to be a shortage. People that have these houses and these low interest rates don't want to sell, and I think it's going to be, I think that the value is going to continue to go up, and maybe 7% is the new norm.
So that brings us to our third uh, best city to invest in, which I want to kind of say that with a grain of salt because personally I wouldn't invest in Austin right now, but it has its ups and downs. And if you're somebody who lives in Austin and watches the market, because remember, real estate is it's a very local investment, right? Yes, there are macroeconomic factors, the Federal Reserve, and all these other factors that affect real estate, but it's local supply and demand. And more than local supply and demand, real estate supply and demand goes up and down, not based on consumer sentiment necessarily, but the availability of funds, right? So if the banks are lending like nobody's business, developers develop regardless of, and a lot of developers do develop regardless of demand, and then they go bust. but they still develop, right? The housing market still goes into this overdrive mode. Um, so, if you're living in Austin and you know the market well, you know the geography well, you know the areas that have a supply and demand imbalance, that's where a good investment happens. But right now, if you just look at Austin's market, the average home price is 600,000 versus a $320,000 in Houston.
Yeah, no, it's definitely to be in Austin is a luxury. They have some really tough real estate market there. I know that I've seen people that I know personally have bought properties that have jumped up 30, 40% in 2 years in value. But they can lose it just as quickly.
Right, and that's really why Houston is so good, is that 3% up, 2 to 3% down, not a big movement. But when you get these 20% swings going up, then you can easily go 20% down too. So right now the average growth in Austin in Austin is 9% a year. Prices are going up by about 9% a year. And don't get me wrong, Austin has a very strong job market. A lot of these companies over the past 5 years, uh, when Elon Musk decided that he wanted to put a Tesla factory in Austin, a lot of companies followed, and now you're starting to get this. The people in Austin don't like to call it Silicon Prairie, but I heard that term about 20 years ago. That maybe even more, maybe even 30 years ago, that uh, the the government in Texas wanted to make Austin the Silicon Prairie or the next Silicon Valley, but in the Midwest or in the South.
Yeah, no, Austin is deeply ingrained in the IT and technology fields. I mean, it's got, you've got Musk there now, but prior to that, I mean, you had Motorola, Applied Materials, Advanced Micro Devices, just on and on, Texas Instruments, and so deeply ingrained in that community, and it's it's just I don't know how that impacts the real estate market other than the IT and technological fields can get hot and cold, and it impacts the housing market greatly.
Well, I mean, if you're going to look at history, if you're going to look at a historical trend, you can look at Silicon Valley and you can see the beginnings of Silicon Valley and the real estate market. Obviously, we don't have as many companies in Austin as there are in Silicon Valley, but you can look at the beginning trend and see where that trend is going. And to me, what is going to happen? Silicon Valley also is kind of limited in space. Uh, Austin is not. Austin can grow and grow and grow. Then and then because of the tech sector, a lot of people work from home. They work remotely. So there are places outside of Austin now, even up to San Marcos. Pflugerville is closer, but even San Marcos is starting to get hot now because it's Austin city limits.
We're talking about Houston and Dallas and Austin, and we did talk about other cities in Texas as well. I know that San Antonio wasn't far behind in our opinion, and we kind of think it's a sleeper, and we think that market might get hot. And then you kind of look at Texas, and there's Laredo, and there's some great cities in South Texas, uh, but we kind of look at that as the South Texas as its own market, and it's kind of unique, and I think it's definitely it plays a role in the Texas market, and can be a good investment as well. But because of how fragmented it is, it's kind of hard to quantify it, and it's really, like Jay was saying, you really have to be local and in that market to understand it.
And I'm a big believer of, if you really want to succeed in real estate, pick an asset class, pick a geography, and know that better than anybody else. Know it really, really well instead of trying to, invest in Austin and invest in San Antonio and invest in Houston and invest in Dallas. You know, Pick an area in Houston, learn it really well, get to know it really well, and you will succeed in real estate. There's no doubt about it. But you have to know the local um, the issues that are being faced on the ground in the local market.
Yeah, and I think that's the key to success is having feet on the ground, troops on the ground. You know, whether you're there or not, if you want to invest in these cities and you're not there, you have to find reliable partners, and you have to rely on them to be your local and expert opinions.
I mean, just in Houston, we're living in Houston. The issues and economic factors that drive the Woodlands, which is up north, versus what drives Sugarland, which is down south, versus what drives uh, Brookshire, which is west, or if you go to the east, you go further out to Beaumont or um, uh,
Baytown.
Baytown. That's it. I knew it was on the tip of my tongue, but you know, Houston is so spread out that the economic factors, the demographics, the reasons why people want to move there or don't want to move there uh, are very very local, right? Some people are looking for, you know, a short commute to work. Some people are looking for just a good school district. Some people are just looking to be close to family. So you have to be in that market. You have to really, really study, understand, know the market, and then go invest.
Well, those are our top cities for Houston and where we think you should put your money. Um, this Arthur Fuentes Rare Pink is a really good smoke, and hopefully y'all learned a little bit, and you'll jump on albanyparkcapital.com and read some articles and get educated.
Yeah, and check out our other social media. We're on Instagram, we're on LinkedIn, and of course on YouTube. So yeah, get onto our website. There's a lot of free resources there. There's a lot of articles there, and feel free to leave us some feedback. We'll be happy to answer any questions you have.
Grab a good cigar and enjoy the rest of the week.
Have a good day.